Hi everyone, Daniel here from One Mortgages and Protection, your mortgage and protection insurance brokers. I hope you're liking the new video. I hope you're liking the content. If you do, please be sure to like, share and subscribe for all future videos and information on all things mortgages and protection related. Please take a look at our website by searching for One Mortgages and Protection or check us out on all social channels. Thanks very much and enjoy.
Hello, and on this episode of the Mortgage and Protection Podcast, we're talking all about bad credit with Daniel Condren from One Mortgages. Daniel, thank you for joining us once again.
Hi Tessa, yeah, good to be back. Good to be back. Do another episode on mortgage options, mortgage information, anything mortgages, and today's bad credit and adverse credit. Is that right?
That's correct. And of course, this can obviously be a worry to people. And we've got a list of frequently Google questions that people are asking on bad credit. So let's get straight into it. So to begin with, and for those that might not be aware, what exactly is bad credit and how does it work?
So when you go and apply for a mortgage to buy a house or to remortgage a house, it's the lenders, when they lend you the money, will go through an assessment. So they typically look at your credit file. And with data and information nowadays and technology, all your information of what you've borrowed and everything about you as a customer is on a file or a profile. And they use these credit reference agencies to build up a history of you as a customer. And bad credit is when you've either missed a payment or defaulted or had something gone wrong in the past, and you can't hide it or you can't get away from it. You know, years ago, when it must be 20 years ago, they didn't have technology and these credit files and everything else. It was really just about the bank knowing you and what your bank conduct was like and your statements. But now everything is so technical and transparent that if you have a missed payment or something goes on your credit file, it typically damages you. So you don't want that. You want to be as I suppose, clean as you can and pay your bills on time and keep up to things and be financially prudent and pay your bills on time and keep up to things.
Yeah, okay then. So obviously this next question asks, can I get a mortgage with bad credit? I mean, will anybody lend sort of to people with bad credit, Daniel? How does that work?
They will, but they want to have a little bit additional security from a customer that's had bad credit. So if it's very repeated and you've obviously damaged something, you've missed a payment or something's gone terribly wrong, they typically go in stages of how bad they look at it. So if you've had a missed payment that's just a one-off and it's a blip, then typically some lenders would just understand that and recognize that everybody has a mistake. You might miss something as a one-off, but if you've repeatedly damaged your credit file or just missed things and not really care and it's not showing good responsibility, then you're going to have issues with lenders. Now, having said that, the more recent the problem was, that's when it's going to cause a difficulty. So if you pass over 6 months, a year, then it becomes 2 years old and it becomes easier to then get back on the mortgage ladder or remortgage or look at something. Even as bad as a bankruptcy or an IVA or something like that, the longer you leave that event, the more likelihood is if you're going to get a mortgage. But going back to your original question, can you get a mortgage? Yes, you can. But to add security, you may be requested to add a bigger deposit. So that means you've got to typically put in 15% as a deposit rather than 5% as a first-time buyer or 10% as a first-time buyer or remortgaging with 10%. If you do have that problem, then you would typically need to have a bigger amount of equity or a bigger deposit.
Right, okay, which is definitely something to bear in mind. And you mentioned an IVA there. We will go on to talk about sort of the types of bad credit. But first of all, which you've already touched on this actually, when you mentioned, obviously, we've got a lot of technology now, haven't we, that kind of monitors this. But how do I know if I have bad credit? I mean, where do you go to find this all out?
Yeah, our friend Google, which will love us for it, or any typical search engine, you would put them in there. Now, the main ones that are recognized from the banks, because the banks and the building societies use the big major players, and that's people like Experian, Equifax, Call Credit, the big people that have got, the bigger I suppose, history of that and doing all that. I mean, there's so many new credit reference agencies coming through, like ClearScore and all these new technical, the ones that are trying to get you to sign up and check your credit rating so that they can act as a referral network for when you do need a loan or you want a credit card or you want a mortgage. It's all interlinked because they're going to try and market the products to you through that. And that's what they're trying to do, is check your credit rating, because you might be eligible for a credit card, you might be eligible for a loan, or you might be eligible for things like that. So that's ultimately what they're trying to do, is get you on there. But the basis is just to check whether you've got a good credit rating. And the best one is the big main ones that are used, because that's what the banks are going to look at. But if you've got a good credit rating, then it's done its job. All you're trying to do is just recognize, have I got a bad credit rating, or is anything wrong? If you've got a good, a fair, or an excellent credit rating, then it's not going to cause that much of an issue. I would always recommend just to check, just for your own peace of mind, whether there's anything missing or anything that's caused a problem, and that's music to our ears as brokers, and it helps the customer, because there's nothing worse when a customer thinks that there's nothing gone wrong, everything's fine, and then when you actually do apply, it comes back with something to say, oh, there's an issue here, or there's a problem there, and then you've got to be a bit like Sherlock Holmes, and you've got to go and find out what the problem is, who was it with, why did it happen. And it's a surprise to some clients that I didn't even know that was an issue, whether it was a communications with a telephone bill or a utility bill that you just completely forgot about. You moved house, it never picked up. So that's another thing, that lenders are very aware that things like that happen. And if it can be explained and it was a one-off, then and you can evidence that, then you find the lenders, some lenders will actually disregard that because of it's just as a one-off, or they would consider it not as repeated behavior. So that's good news.
Right. Okay. Yeah. No. Definitely. Am I right in saying, because you mentioned a telephone bill there, that mobile phone bills catch people out quite often? Is that right?
Yeah, they're
Yeah.
vicious. Phone companies, phone and telecoms and people like that. If you are not on it, they will hit you with
Yeah.
a default CCJ problem or whatever, and
Oh,
come after you for something as small as like £50 or something, or £100
wow.
of missed payment. So the last thing you want to
Gosh.
do is that one little problem with,
Mm.
I don't want to name names of big providers, but a little problem like that that's going to cause you an issue and cost you. And it is costly, because the difference of a normal rate of a high street lender to a subprime or an adverse lender, a specialist lender, is it can mean hundreds of pounds a month that you
Gosh.
have to pay to buy a house, compared to getting a headline interest rate. So,
Wow.
but the good thing is that what a lot of customers forget is, once you've done your mortgage and you get a specialist lender or an adverse lender, the best thing you can do is, as your credit rating improves, always go back to the broker as your credit ratings improve 2 years later, 5 years later, to move back to mainstream, to go back to a headline rate. So the borrowing needs to be reviewed constantly. So if you've got a bad credit rating and it's only temporary, and I must stress it's temporary, then you would go back to a broker to save you that money and move you back to the best mortgage possible. And that's what a broker's job should be, is to stay with you and save you that money over a 25-year, 30-year period, and review things constantly, not just when you first get the house and get that really bad interest rate for a specialist lender.
Yeah. Gosh. Yeah. Well, some really good tips there, and watch out for those mobile phone bills, because they'll catch you out.
They
So
will, they will come after you.
they will. So be careful. So following on from that, then, can you get a mortgage with a low credit score, and why would somebody have a low credit score? I mean, I suppose we've just sort of touched on it there, haven't we?
Yeah, so they shouldn't be categorized as the same thing. You can have a low score
Okay.
without it being bad. So a negative
Right.
scoring might not necessarily mean that you've had a default or a CCJ or something gone wrong. It just means that you're not scoring as many points as you should. So the lenders are going to want to know that you're in one place, that you're secure, that you've lived at the same address, that you've got some type of credit, whether that even be a debit card with a bank account. So have you got a bank account? Is it registered to the address that you're registered? So if you live at an address and you're an adult, you would expect to be on the electoral roll with your local council and be registered, but that sometimes they don't do that. You may not have a bank account, which is very rare nowadays, but you would have a registered bank account to the same address. If you move around and you don't change your bank account and you don't change anything, that's obviously a worrying thing. So just make sure that that's up to date. So you can have a low score because you've not got any credit. You haven't taken any loans or credit cards. So you've not got any, credit history as such. You might be young, 21, and not had anything in the past. Now, the difference between a mortgage is that when you buy a house, you need to put in quite a substantial deposit or put money down yourself. So even if you had a low score, lenders are not going to say no just because of that one reason, because you're putting in a deposit of some value. So you've got skin in the game, or you've got some type of money that's in the investment of the house. So it's not a case of no, but some lenders do just take that no policy. You're not in my appetite as a customer. So some lenders are very selective in saying you need to have this size of deposit, your credit rating has to be this good, and you need to do it, or else we're not even going to entertain it. And things are getting more competitive, and people change. The lenders are opening their options again and coming back to market with exciting new things. But there are some that just don't even entertain it, and we call them like the vanilla lenders, or just have an appetite for certain things. But yeah, there is other lenders that do think outside the box, that do consider lower deposits and low scores, as long as it's not adverse and you've not had a problem that we can deal with.
Right, okay, which makes sense. And this might seem like a really obvious question. I'm just going to throw this one in here. We're talking about credit score, credit ratings. There's a lot of jargon involved. Is credit score the same as a credit rating?
Yeah,
are they the same thing?
A score and a rating is exactly the same.
Same thing.
The credit score it gives you a score out of a certain amount, and your credit rating out of a certain amount of what they're going to do, whether that's 5, 4, 3, 2, 1, and how you scored in a number, or 999 out of 999, or whatever your score is, whether they class you being excellent, good, fair, average, poor, very poor. So they typically all score it in the same category. It's either good or bad, or excellent or average. But yeah, a rating and a score is just assessed in the same way.
Right, okay. But they're two separate things, are they?
No, they just
same thing.
They're the same thing. They just define, they define differently from different lenders of what needs to be a certain level. So the lenders have what you call an assessment or a scorecard, and you have to meet certain things on their scorecard to pass. So they might look at your address history, they might look at your income, they look at your age, they look at the all different numbers of factors on that customer, of the likelihood of them not meeting the requirement of the mortgage, paying it on time, or anything else like that. And some of them don't do a credit score or a credit search. They literally just do a manual assessment. So some of them don't even do they're not even bothered about what your credit score is. They just do a search to see whether you're there and a real person or such, and then they're fine. So that's good. That's good in some ways, because we're in this technical age where computer says no, computer says yes, and some lenders just won't even entertain it, even if there's a really good reason, and you try and go to them and say, I've got the best person in the world and the biggest mortgage in the world, and they just still won't even open their doors to consider it, because computer says no and it's not within our policy. So sorry, it's not for us. But they're the good ones for us as brokers, because we should know where to place it, where to put it to satisfy them, and still give the customer what they want, which is to buy a house or to save money or just get on the housing ladder or buy another investment. So we don't want people with bad credit to think, I've had a problem, it's recent, but I'm stuck now and I can't help. So no, that's wrong. brokers can still help you and look whether we're doing it, whether they still need a mortgage. But I've got to protect myself here of saying that if somebody's been bankrupt, or they've just gone into an IVA literally a month ago, then we're probably going to have a problem. We're probably going to have an issue. But over time, things repair and recover, and then we will have options available.
Okay, brilliant. Which actually sort of answers a question we've got further down, but we'll go on to that in a minute. So let's talk about our CCJs, our defaults, our IVAs, so our types of bad credit. So you've probably already answered this, but can I get a mortgage with a CCJ? And what is this? What does it stand for, Daniel?
CCJ. Oh, I wish I could make some funny joke of what it is. But no, a county court judgment. So if you have been taken to court by a telephone provider or somebody, a car parking ticket, for example, these commonly come up and cause a problem where the council or a private company for car parking have tried to get their money back for a car parking, and the customers ignored it and buried their head of saying, look, they're just going to go away. They're going to go away. And then all of a sudden they send them the court hearing, and they don't turn up and everything else. And then they've got, they can actually slap you with a CCJ, a county court judgment for your parking fine. And then that causes an absolute problem of going, what was it? Why did you not pay it? And then the customer's answer is, well, I'm not giving them the money, or I didn't feel I needed to. And it's like, well, now we've got a problem because the CCJ's severely impacted your credit score, which means you're going to have a problem, buying the house in the first place or remortgaging, because the CCJ is so recent, it causes an issue. But parking is, again, another one that is a one-off. It's an exception.
Yeah.
So if you do get a car parking fine, my advice is to pay it, satisfy it, come to not even come to an arrangement. Do it early so it's paid off and it doesn't cause an issue. But they cause a lot of problems with car parking fines. So county court judgment, my advice is try not to get one. Please pay your bills. But if it does happen, you can still get a mortgage with a CCJ. We just have to wait a minimum of 6 months for it to recover. And once time has passed, then you will have availability to lenders again, and the rates will get better over time. The next one is a default. So if you default on a fixed payment, so you've got a loan or a car finance or something like that, and you actually default and you become a month behind on payments, you have to bring the payments back up to date. So defaults also cause an issue of when they were registered. And the longer the time has passed with it first being registered, the more likely is lenders are going to be happy to accept you again for a mortgage.
Right. Okay. And then we've kind of spoken about the IVAs, haven't we? Have you got anything else to add?
On an IVA, an involuntary arrangement with creditors. So if you've had an arrangement with a credit card and it's causing an issue, or a debt management plan, that's another one that causes problems. These are quite major things. If you're in an involuntary arrangement or a debt management plan, they are quite hefty, and lenders are worried about them. So you've just got to understand, how long have you been in the debt management plan? Has it been paid off? Are you clear, and what the issues are? But again, speak to a broker if that is you and you are in that and you want options for a mortgage. Just be as fully transparent as you possibly can. That's my advice. Tell them everything, because if you don't disclose everything, it's going to be so much harder for the broker to find you a mortgage. The more transparent you can be, the better. So just tell them everything about what's happened, what was the problem, what was the deal, honestly and accurately, and then the broker's got the best chance to get you the mortgage.
Yeah, I mean, oh, sorry, you go, Daniel.
I was going to say the next one. There's another one after this as well, which is
oh, right, okay,
to mention, is mortgage arrears. So arrears of a mortgage is quite serious. So if you've not quite got to a house being repossessed, but you've missed payments on the mortgage, that's probably the most damaging, where you've already got a mortgage, but things got so bad financially that you just didn't pay the mortgage and you got behind. So that might be happening right now with COVID. It might be happening with people, losing their job or something going wrong like that. And again, we can't limit that if you're in arrears, we'll never be able to get you a mortgage again. Over time, it will improve and it will get better. My advice is always go back to your current lender to see what support, guidance, and help they can offer you first. And if they can't offer you anything, of course, speak to a broker to see whether there are options to you move to a different lender once the arrears have been fixed and helped. But any financial advisor should be able to help you in that type of scenario.
Okay, I'm glad you clarified all that, and I suppose time is key with arrears then, and honesty. As cliche as it sounds, I suppose honesty is the best policy, isn't it, to getting somebody where they need to be to get a mortgage. So yeah, it's all very insightful.
Yeah, of course.
Okay, then. And finally, is the process any different for first time buyers or if you were to remortgage? How does it work then with bad credit?
It's just the same assessments, same everything. Now a first-time buyer
Yeah.
typically would only have a small deposit, so the likelihood of them
Yeah.
getting through this 15% minimum, like I said, for real adverse cases, that you're going to have it. But you're going to have problems of being a first-time buyer. Whereas if you're remortgaging, like I said, you've probably had the house a while, you've paid it down over time. So you're going to have a big amount of equity in that house. So the likelihood of being able to remortgage or get to a better rate or even get a mortgage on a remortgage to save on interest is probably easier for people that have already got a mortgage and got some history. First time buyers might not have that history. So it would be harder for a first time buyer with bad credit. But again, it's just down to the situation and the circumstance of the customer, and letting the broker do their job of finding the lenders that can do it. The best advice a broker can give you is that we might not be able to do it now, but they certainly will point you in the right direction to say, you need to get to this point. If you come back to me in 6 months with this level of deposit or move towards that savings or whatever else, then they can give you options. And that's what a good broker should be doing, is giving you the options.
Okay, then. So, just on a final note, if we've got somebody listening now that has bad credit, or they know of somebody that has got bad credit, whether it be a family member or a friend, what would you say to them? What would be your key advice? You've given us a lot of advice and tips already, but what would be your number one key advice?
I think just don't bury your head. Don't. I know it's hard for somebody to say that to you if you've had problems, or there's a
Mm.
lot of pride involved, or you've got your it can be a little bit embarrassing, or you might have had problems and you might not want to share what's happened. But we're all human. We all make mistakes. We
Mm.
all understand that the financial implications probably could affect that. But the if you face up to that, the faster you can get on the housing ladder, the faster you can own a property or save money, which it comes down to. So if somebody has got a bad credit rating, then just seek advice on how to improve that, how to get it better, to be in a position to get back to owning a house, or sort out your finances, because that's what it comes down to. Is that if you've had problems, it's caused by something. You might have lost your job, you might have had a problem, you might have lost somebody that's close to you and just not been able to support yourself or cope. But we're here to help. If somebody needs that help and that guidance and support, that's what we're here for, to help them and save them money, and get them back on the path to not paying as much interest and having the houses that you want, and saving money. So I suppose just pick up the phone and speak to an experienced broker that's going to help you and point you in the right direction.
Yeah, there we go. I suppose, yeah, don't feel ashamed and seek that advice so that you can move on. And yeah, that's been really, really great. Thank you for that, Daniel. And I'm sure we'll catch you on another episode very soon.
Until the next one, cheers. Thank you.
Bye.
Hi again. Thanks for watching. If you'd like, share and subscribe to the channel, that would be amazing. And for more insights and information on mortgages and insurance, look out for our next video. Thanks.